Alright, video number 2, and we're talking post-wisdom teeth surgery again. The blood is flowing right now, I will say that, but we're just going to commit through this and then I'll rest afterwards. Might as well just get this one out of here. We're talking about Tilray, because I said I would. When I did my earnings, most anticipated earnings video, I said I would talk about Tilray for one main reason. I told you the stock was going to go down. And guess what? Down 4% after hours. At one point, it freaking shot down right after close. Pretty bad, around 7%. Let's look at these numbers. And if I sound quiet again, that's because I'm trying not to talk too loud. The louder I talk, I think it, could cause some damage to the stitches. And we're not trying to do that. But so Tilray, and guess what I called? GAAP EPS of negative $1.73 per share. Missed by $1.21. This is one thing that I told you. I told you the revenue number would be fine, which is good. Beat by 2.45 million, up 126% year over year. But I told you for a fact this EPS line was going to be horrible. And you're going to see it with all of these marijuana companies, Mary Jane companies, whatever you want me to call them. Don't want to get banned here, but I told you the profit line is going to be horrific for these companies. It's going to be bad. And I'm glad to see that point was true for me. I'm not completely stupid, so what can I say? Maybe in pain, but I'm not stupid. So revenues, big growth. Cannabis sales was up 77%, and adult use up 164% year over year. Big stuff. But net loss, $184.1 million down the drain for Tilray. Put that in reference, they only made $52 million in revenue. 3 times that amount, 3.5 times that amount went to net loss. 3.5 times the revenue that they got in net loss. That is disgusting. Non-GAAP EBITDA, which is even faked as is because it's non-GAAP, 28.8% down, 19.7 million. This is a cash burning machine, and it's hard to believe that this stock at one point was up over $300. Can you believe that? This thing went up to the freaking $300 range at one point, I think. I don't know if it was just that or if it went to close to 200. It was something crazy. But this is a company that is just pure garbage as far as the numbers are concerned. And I get the hype around it just because it's a blossoming industry. No pun intended, but pun intended. So let's take a look at these numbers that they're showing me. This is pitiful that they mentioned this. They implemented cost reduction designed to achieve $40 million annualized savings. $40 million ain't going to save you, buddy. You just blew through 3.5 times your revenue in quarterly loss. That's disgusting. Quarterless or international medical cannabis sales exceeded cannabis medical sales by 43%. Cool for them. And sales were up 11% sequentially quarter over quarter. Pretty cool. And that's good for them. So, they reduced net loss by 30 million. It's not helping me that much, I'm sorry to say. It really isn't. But growth was driven by cannabis sales, which experienced meaningful income across all channels with a lack of bulk, and the inclusion of Manitoba Harvest acquisition for a full quarter in 2020 compared to a partial quarter in the prior year. So they have a whole other company making revenue for them too. But I mentioned this as well. Revenue should be fine for them because we're at a time where, just due to all the stress going on in the world right now, people are picking up a lot of vices. Smoking marijuana is their vice. If they pick up that, they pick up drinking. People are picking up smoking. There's a lot of people picking up some not bueno habits. So I think that's a benefit for them, obviously, and you saw that in the revenue line being pretty good. But yeah, what can I say? Except you're welcome. So here's a breakdown of the numbers. Good stuff for them. International medical cannabis grew 22% or 221%. Pretty nice. But bulk fell significantly because there's no bulk anymore. Yeah, no bulk sales at all. So total cannabis revenue up 76%. Hemp up 282. So yeah, good stuff there. Total cannabis kilogram equivalent sold increased 92%. It's a lot of Mary Jane. Net loss of 184 million. I'd like to see how that compared to a loss of 29.4 million for the first quarter of 2019. So that's one of the most ugly things I've ever seen. I'm just going to be honest with you. We're talking about 6 times the amount of loss year over year. Are you kidding me? That is what I would call bad management. I'm just telling you that right now. That's ugly. But business highlights: Tilray made several additions to its executive team. Hopefully they can figure something out. John Levin, who is formerly of Revlon, I remember John Levin, joined as COO. Hopefully he can fix that garbage of a company, that garbage. They need a CFO, which is going to be Michael Krudik, which I don't know if that's necessarily going to help you because that first quarter was the worst quarter I've ever seen in my life. Company signed a 2.5 tons strategic partnership agreement with Kandak, an Israeli medical cannabis agency. I don't know what's going on there, but February 28th, 2020, the company closed a $59.6 million senior credit facility that bears interest at Canadian Prime plus 8% and a 2-year term limit. In March 17, the company closed an unwritten registered offering of common stock, so basically they're just devaluing the stock even more. On March 25th, Board of Directors unanimously approved a pro rata release of 11 million shares of Class 2 common stock, once again devaluing shares. Good for them. Now let's look at that balance sheet, see what they have to offer me. I think this is in thousands, yeah. Cash equivalents of 173 million, which has increased quite a bit quarter over quarter because of that debt raise. Total assets on this company of 915 million versus the 896 million of last quarter. Total liabilities on this company though of 725 million versus 611 million. So that leaves only a shareholder equity of 190 million. And they burnt that much oh gosh, that hurt. They burnt that much in terms of net loss this quarter alone. I mean, this is not a company that seems like they're going to be around until they keep devaluing shares and increasing debt. It's just bad numbers right there. I mean, at least Uber can burn $3 billion, but they've got the asset difference from the liability to actually pay for it. A company like Tilray can't even pay for this one quarter that they just botched. So there's a lot of concern to be had here for this company. Just ugly. I mean, it's ugly. What can I say? Yeah, I don't know. I don't know what to say about Tilray, but it's not a company I'd be investing in. There's too many players in the game, and I understand the hype about them, but there's just too many players. Not all of them are going to be winners. It's just kind of how it is. There'll be some main players, and Tilray might be one of them, but I think there's too much risk involved with this stock to get involved with it. Obviously, it's a market that's going to be blossoming in the future. It's going to be big, big, big. But if they can't maintain their loss levels, it's just not going to happen. They can't survive another quarter like this. They just can't. They're going to be outweighed in debt. It's going to be ugly. I think the stock's going to go further down from here. I think probably going to touch lows of $4 to $5. So just keep an eye out for that if you still want to. If you wanted to pick up the position, I certainly, you can do whatever you want with your investment decisions. And if you believe in the company, just wait. I think it might go down to around $5. So just keep an eye out for that.